Hello and welcome back. So we have talked about NACH mandate. We have talked about what are the benefits, who are the participants. Let us find out typical NACH mandate looks like and a NACH mandate transaction looks like in NPCI in India. So this is the transaction flow of a NACH mandate. So let us find out what is this transaction all about. So the customer is creating a mandate to a corporate. So the corporate could be anyone. It could be a utility service provider. It could be a lender which has given a loan to this customer. So they create this mandate to any of the three channels. You remember we spoke about UPI. We spoke about filling up the details on the online or through a paper mandate as well. So they fill up the mandate. They give it to the corporates. Corporate will assemble this and will send it to the sponsor bank. You remember, a sponsor bank is the same like ODFI and ACH. In India, it's called sponsor bank. Sponsor bank will send this to NPCI to create a mandate against all the information provided. It also does the same thing which ODFI does all the checks whether everything is perfectly fine or not, the details are filled in perfectly or not. So almost all the rules which is there on ODFI and RDFI and RDFI into ACH system applies here as well. So these sponsor bank also have the responsibility to keep the mandate secured, safe for certain period of years as defined, and then also to check all the details that whether it is perfectly fine or not, all the details are filled in properly or not. And then sponsor bank sends all the details to NPCI. So see here it says that scanned mandate images, which means if there is a paper-based mandate, the scanned image mandate is sent by the corporates to the sponsor bank sends that to NPCI. Now NPCI, after setting up the mandate, creates a unique mandate reference number, and any debit or credit transaction which flows from the corporate to the sponsor to this system will be referred by this UMRN number only, unless any individual or any corporate quotes this. The NPCI will not be able to perform any transaction like setting up, amending, or cancelling the mandate. Now NPCI sends this detail to the destination bank. So destination bank is nothing but the RDFI or the customer's bank. So now once this happens, the destination bank informs about UMRN to its customer that okay, that I have received a deduct request from the corporate XYZ or telecom company XYZ, and they are saying that they want to deduct the money from your bank account on 10th of every month. So this is, remember, this is just for the information. Here the destination bank is not seeking any consent again, right? Because they have already received the consent from this route. The image consent and UMR and everything is generated. Here destination bank is just informing to the customer that a mandate request has been received. So in that case, for example, if it is a fraudulent mandate, or for example customer wants to cancel it, what they can do is that they can inform to the same corporate, I want to cancel it. And if they are not aware that if there's a fraudulent, what they can do is that they can reach out to their own bank or destination bank here and say, I do not recognize this mandate, please cancel it. So the destination bank will cancel that mandate stating it's a fraudulent mandate. The information then goes to NPCI, which cancels this mandate. NPCI sends that information to sponsor bank. The sponsor bank sends that information to corporate that the customer has declined or has revoked the authorization or has mentioned that this is a fraud transaction. But let us not talk about that. Let us think that everything is perfectly fine. So the mandate is set up. Destination bank in one message informs to the customer that a mandate request has come. And then destination bank sends the verified information mandate to NPCI, which stores that mandate that yes, mandate was approved, and then that is sent to the sponsor bank. The mandate then goes to the corporate, which also stores a copy of it stating that because the corporate also needs to know what is the UMRN or what is the mandate information. So all the parties here are informed about the mandate reference number. So now if you look at here, the sponsor bank back office, what they do is that if that is a paper-based mandate, they will scan the paper-based mandate and they will upload into the sponsor bank system. You remember we talked about the SFG portal and all other detail and the file gateway which is given by NPCI. So those scanned images and all the details are uploaded to this file, and then it goes to NPCI for storage. And you remember we also talked about that the destination bank or the RDFI needs the proof of the mandate, which means that once this image travels to the destination bank will match the signature, that whether the signature of the customer is matching with what they have in the record. If the signature is not matching or if there is certain issues with that, destination bank will refuse to accept that setup and say that this I do not recognize this signature and hence I will not be able to honor it. So that is also one of the issue that the customer has to be very prudent in signing on the mandate, otherwise it will get rejected, and again it will have a long, I would say, the process of setting up the paper based mandate again. So that this is the process of NPCI system, our National Payment Corporation of India system, which takes care of NACH. And this is the transaction flow of a NACH mandate and also the deduction of the money. So we talked about the NACH mandate. Let's find out how does the deduction of money happens. So on the date of deduction, what corporate will do is that they will initiate a deduct transaction to their sponsor bank. Sponsor bank will send that deduct instruction file using that file gateway to NPCI. NPCI will instruct to the destination bank that today is a settlement day, which means you have to deduct that money from your customer's bank account. Destination bank will check whether the mandate is valid or not. If the mandate is valid, if the account is perfectly fine, and if there's a balance into the bank account, destination bank will deduct that much amount from their customer's bank account, will send it to NPCI. NPCI will settle that to the sponsor bank. Sponsor bank will settle that to the telecom operator. And then the customer gets informed by their bank that amount has been deducted for your telecom service provider against the mandate that you had set up with them. So this creates that both process. You remember we talked about two processes in mandate. Number one is the consent management or the mandate management, where the mandate gets registered. And the second transaction is where the actual money flows from one bank to another bank. So we have talked about both processes here, and that's complete the transaction flow of the mandate. Whether it is debit or credit follows the same process. So that's all in this chapter. See you in the next chapter. Till the time, take care and see you there. Thank you.